Hey, Facebook friends. Thanks so much for joining us today. I have the privilege today of speaking with Terry Hatfield Dole. We've gotten to work together on quite a few deals here over the years. And she's going to be answering some questions that you guys may have about mortgages, the status of the market. Do you want to take a second and just quickly introduce yourself?
Yes, hi, Terry Hatfield Dole with Certified Mortgage Planners. Excited to be with you today and look forward to chatting.
Cool. So let's start with the basics. What's the difference between a mortgage lender and a mortgage broker?
Give me 1 second because I'm going to share this on my Facebook. Sorry, it wasn't coming up.
No, it's great. Thank you. Let me see.
Sorry.
Yay!
Okay, so difference between a mortgage broker and standard lender. Basically, a mortgage broker in Florida is licensed both on a federal and state level. So we're trained in both conforming and non-conforming loan products. So really, we just have access to do more loan programs. We're also not limited to a single bank or lender. We actually have the ability to work with multiple lenders looking for the best rates and loans for our clients. We're also compensated by the lender, so it's not anything extra for the buyer.
Okay, so you're kind of like a one-stop shop when it comes to the mortgage process. Is that fair to say?
Correct. Yeah, that's fair.
So we are obviously in some really crazy times right now. I know a lot of people are, going through difficult things. How has the mortgage industry been adapting to all of the recent uncertainty that we've been seeing?
It's been wild. So I will tell you that we're adjusting to our new normal. We are fully operational, so our entire staff is working from home. But we are seeing, stricter guidelines and requirements with credit, credit, down payment, asset reserves. So, we are also seeing many of the non-conforming loan products that are being paused temporarily. So this is going to impact your bank statement loans for your self-employed buyers, as well as investment purchases, and also some of the jumbo loans.
And I'm just going to say, first of all, I'm so grateful that we do get to work together, because I know I've been one of the agents of probably 1,000 that you work with that blow up your phone every day for current market updates. And I do think it's just so crucial right now to work with someone that is extremely knowledgeable. I know Terry's always a resource for me, but pretty much a resource for everybody. And I think, you've been really proactive from my experience in other transactions as well. Instead of being reactive to things that are happening, it seems like you kind of always are aware of what's going on, which has been so helpful. How are the mortgage rates looking as of late? I hear so much stuff. The rates are crazy. It's not a good time to buy. How are they looking?
Rates are actually low. So I think they look really good. They're not as low as they were maybe a month ago. So when you were hearing about, rates below 3%, we're not seeing it quite that low. Most of the loans that I've been locking over the last few weeks have been between probably 3.375, 3.875 range, depending obviously on credit, down payment, loan program. But they've been volatile, in recent weeks. We normally will expect to see rates change on a daily basis. Occasionally, we'll see a midday change. In the last 4 to 5 weeks, we have seen rates sometimes changing 4 to 6 times a day. So that's a little bit crazy, and in our world, not common, not something we're accustomed to. But right now, they seem to have calmed down a little bit. We're still seeing rates change once or twice a day, but not nearly as much as it was.
And just to touch on that rate change, like you said, it's changing 4 to 6 times per day. How are you working with your buyers who are currently under contract when it comes to that rapid rate change? Is there something you can do to help them get that better rate?
I think anybody who's doing this business right now, we're paying really, really close attention to what the rates are. So we have a pretty good understanding of what rate our buyer can expect, and then we're locking as soon as we see that available. So with most of my clients, we're locking very early on in the contract, just so that we know that we're protected. If rates were to significantly drop, we do have the ability to go back in and renegotiate rate, or if we needed to, we could even switch lenders. But with most of our clients, we're safe and we don't have to worry about those multiple changes.
That's really encouraging to hear. So far, buyers still have the ability to lock their rate ahead of time. It's not like it has to be the day before or anything like that. If they get the good rate, they can lock it.
They sure can. In fact, we've got buyers who are out shopping where we will do a to be determined on address and do a 60-day lock if we find a rate that is strong enough and they're happy with that. So we can certainly lock our buyers early on in the process.
Okay, and so I know you talked a little bit about rates are changing. How can a buyer boost their ratings to qualify? I know there have been some changes that we're going to talk about a little bit later on, but how can they boost their credit ratings to qualify for a loan at this point?
So working in mortgages, we automatically become credit experts. We didn't set out to do that, but it just sort of happens. Fortunately, we work with certified credit, which allows us to go in and do a credit analysis, and we can run what-if simulators. So if we have a client, maybe they qualified a few months ago with a 600 credit score, but maybe they don't with some of the new changes and guidelines, we can go in and do what-if simulators to determine if there are certain credit cards that we can pay down or pay off to boost their credit scores. So it's not uncommon for us to be able to boost somebody's scores 20, 40 or more points if needed.
Okay, and speaking of changes, what are the major changes that you are seeing most frequently with the government loans right now?
Yeah, so with government loans, I think the biggest thing is probably the credit score requirement. So in the past, we've been able to do loans at 550, 580. Most of your lenders are requiring a 640 or above on your government loans. We are also seeing stricter guidelines on debt to income. So whereas maybe you were able to go up to 50 or 55%, maybe even 57% on debt to income, we're seeing much stricter guidelines on that, particularly if you're on the lower end of credit score. So if you've got a higher credit score, there may be some more options for you. And then the third thing is we're seeing asset requirements. So basically having reserves or additional funds beyond the down payment and closing cost. We're seeing that as a requirement as well.
So I'm sure that sounds a bit discouraging to some of the buyers that have been looking for a home. If they're already under contract, does that affect them in any way?
So it's going to vary lender to lender. I can't speak on all lenders' behalf, but for most of the lenders that we are working with, and certainly the lenders I'm placing my clients with, once their loan is locked, they're normally grandfathered in. If they are not locked, or if they were pre-approved a few months ago and just now purchasing, they definitely want to check in with their lender just to see if anything has changed. Certainly if they're falling into a lower credit score, I would recommend checking with your lender just to confirm there's not been a change.
So again, just kind of reiterating, being proactive at this time and not waiting for the news to come to you, reach out ahead of time. How long do you foresee this possibly continuing at this status? Do you have any insight on that at all?
I wish I did. I think that we certainly are hopeful that we'll see relaxed guidelines over the coming weeks or months, but much of that will depend on what's happening in our economy, what's happening with the virus. I mean, there's just so many unknowns, and it's such uncharted territory for all of us. All of our past predictors are not actually currently working, so I don't think that we know exactly, but we're certainly hopeful.
Perfect. And what's the biggest challenge that you think you're facing day to day on the lending side?
So, for me, I think what I would say is the biggest challenge has been in today's market, having clients who are losing their jobs, right? Or being furloughed even, or having a reduction of hours. We're seeing that as well. So what happens is that's going to impact their approval status. And sometimes if that's happening mid-contract, then that's pretty tough on everybody involved. And so that's definitely what keeps me up at night.
Yeah, we're definitely seeing a lot of that. How does that affect the furloughed buyers overall? What can they do? How does that affect any loans in progress?
Yeah, so we saw this happen with a lot of our Disney folks, right? And so if a a client, a buyer, is furloughed, then we are no longer able to count their qualifying income until they're back at work. So it essentially works as if they were laid off or no longer employed because we don't have that qualifying income. I have had some clients ask if they are able to use the unemployment, and unfortunately, we're not able to qualify unemployment.
And does having the unemployment or filing for the unemployment count against them in that case, or are they okay to use it? Is there a time period where it's going to affect their pre-approval?
Yeah, so filing for unemployment will not have a negative impact, and certainly we want people to do that and be able to take care of their families during this time. So they certainly should apply for the unemployment as long as the employment gap is not longer than 6 months. We shouldn't have any issues as far as them being able to qualify once they're back employed. If somebody switches industries and there's variable income that's included, and by variable income, I mean overtime, bonuses, commissions, tips, then that could be a longer period of time that they would have to wait to qualify. But for most people, if they're getting back to work in the next 2 to 4 or 5 months, they will be able to qualify with their existing income.
Okay, so hopefully just a hiccup in the home ownership journey for some of the people out there that have been affected thus far. So I know a lot of people are taking advantage of or talking about considering a deferment or a forbearance. Can you talk a little bit about the difference, maybe what questions they should be asking when they speak to their lender about any assistance with their current mortgage payments?
Yeah, I'm actually really glad that you're asking me about that. So mortgage deferment, mortgage forbearance basically allows borrowers to temporarily stop making payments, right? So what our clients need to be asking though is, how does repayment work? It's really super important that they're reading the fine print, that they understand the repayment process, because with a forbearance, what happens is you're allowed to miss the payments, but then they all become due in a lump sum. So let's see that you do a 3-month forbearance, which is the most common one that we're seeing right now. That means at the end of that 3 months, your fourth payment would become due along with the 3 months as a lump sum. If you haven't been working for 2 or 3 months, it's probably going to be pretty difficult to come up with 4 months in a lump sum. So we're actually, really telling clients, first of all, don't use this unless you really need it. I would caution you to be very careful that you pay attention to the fine print. It will report to your credit that you're in forbearance. It can lower your credit score, and you cannot refinance when you are in forbearance. So if somebody gets to the end of that 3 or 4 or 6 months and then they want to refinance to pay all of those payments back, unfortunately, they won't qualify. So it's just really important that you're careful with that. Deferment works a little bit different because you're actually able to repay the money over time. Sometimes you can add it to the end of the loan. The ideal situation would be if you can add it to the end of your loan, either in balloon payment or by extending the payments. So for those who really do need to take advantage of this option, I would recommend that you speak to your lender about what options you have for deferment rather than forbearance.
And quick follow-up question to that. Are the lenders required to offer assistance at this point? Some people have been unemployed for a longer period of time. Is that required, or is it optional?
Yeah, I think all lenders are. If you're having a hard time getting through to the bank, you can actually apply online, just wherever you would go to log in for your lender payment. Most of them have online options available because I know the wait times are just ridiculous. Just be very careful that you're not agreeing to forbearance with a lump sum being due if you don't have a plan on how to pay that. We've seen people in the past, like with hurricanes, get in a lot of trouble when they accept forbearance terms.
Okay, thank you. And on a different side of the market there, maybe not as, realtor related, but how has the refinance market been affected? Is it still a good time to refinance? How is that looking on your side?
Yeah, it is actually. So refinances are booming. As most people will remember, we did see rates go up and increase in 2018. 2019, they came back down. Now they're really at historic lows. And so we're seeing a lot of people that are just doing simple rate reductions. where they're reducing their rate and saving $200 to $500 a month, which is amazing. It's improving their cash flow. The only out-of-pocket expense with that refinance would just be the cost of the appraisal. Closing costs can actually be refinanced back into your loan. We're also seeing people that are taking advantage of leveraging the equity in their home. So pulling out cash, sometimes they're consolidating their other high interest debt. So if they've got a lot of credit cards or car payments or things that have higher interest rates, we're seeing people that are doing that. And then sort of like you and I, right? Looking at, oh my gosh, maybe we should have thought about adding that pool now that we're stuck at home.
I know. For those of you that don't know, I got an Amazon blow up hot tub. We can talk about that later. No cash out here.
Absolutely. My husband has had pool guys quoting pools from 6 feet apart in the backyard for the last week and a half. So we're seeing a lot of people that are looking at that more seriously now.
Yeah.
Doing kitchen upgrades. I think now that we're all stuck at home, we're thinking about all the different ways we can improve.
Make it more quarantinable is what I said.
I think so.
Going to be stuck here. I'm going to love it. We're lucky we get to work from home though. So real quick, I know we talked about the differences between a mortgage broker and a direct lender. What's the advantage to using a mortgage broker versus a lender?
I think the biggest thing is we have access to more loan programs over a bank, and we have the ability to work with multiple lenders, which means we can shop best rates and best loan programs for the client.
Love that. And, we didn't want to take up too much of anybody's time today. I know some of these can get really lengthy. So this is a quick informational session with Terry. I appreciate everybody watching. Did have a quick little update there. I really appreciate you, Terry, especially all of your knowledge. I love that because you work with so many different lenders that you really have, I think, some of the best insight here in the industry. So if you could give any advice to current buyers that are on the market right now, what would it be?
I would just say it's a great time to buy, really. I mean, if you're working, if you've been deemed an essential worker, and your employment's not been negatively impacted, we're seeing a lot of great purchase activity. Rates are super favorable, and so there's an opportunity for you to get into a home. And we'd love to help.
I think a lot of people kind of got excited by that super low period of rates, but kind of where I'm at is, we bought our house a few years ago as well, and the rates were more average at that time. So we're still not seeing crazy rates. And I'm really proud of the real estate industry as a whole. I feel like we've all really come together in this time to make the process as distant while still being as close as it can be by doing so much online. Terry actually is local, but I'm in Davenport and she's actually in Winter Garden. We work together all the time. So, your real estate professionals are well versed in doing things virtually. This is just a little insight as to kind of how we do it. But if you guys have any questions for she or I, please feel free to reach out. Terry, again, thank you so much for your time today. And I look forward to talking to you soon. Thank you guys so much for watching.
Thanks, guys.
Bye.
Bye.